All right, folks, welcome back. This is our market review for July 28th, 2022. Starting off with the index futures. Left-hand side, S&P, September delivery contract, daily chart. Right-hand side, NASDAQ, September delivery contract, daily chart. All right, so last night, obviously, I mentioned how we were likely to pull back down into the range of yesterday and then run higher. Gave an objective of 12,800 and then 12,973 and 3/4. Just fell short of it today. The high comes in at 12,948, so just a little bit shy of that, but that's okay. I think it's still likely to pop through there. And on S&P, this was the centerfold for today. We had the market drop down in previous days' range as outlined. Same way with NASDAQ last night, and I'll refer to it again when we get into the hourly chart. These both move generally in tandem. That means they generally move in the same direction. One will lead the other, and one will be weaker than the other. So I gave you running above this short-term high, and then 4075 or 4075 as the upside objective in here, and then 4107 and a quarter. The high comes in today at 4111 even. So I was able to sweep through that. This has completed my week, so I don't need to trade on Friday. I don't need to do anything. I don't have to have any expectations, and it more or less completes my week early. So I will be doing, obviously, the first episode of Ends, which is my new 4-part. I decided what it's going to be. It's going to be a 4-part series, and tonight will be the first episode. Next Friday will be the second episode. There will be a break in between because I will be on vacation, and we'll put the final two obviously when I get back from vacation, and I'll update you obviously through Twitter and on the community tab on this channel. Alright, so let's break this down a little bit on the hourly chart. Alright, so on the left hand side is S&P. We'll do this together on both markets, that way we get through this rather quickly. Alright, so we had the 27th, we had this buy side imbalance, sell side inefficiency. That imbalance is noted, actually it's on the wrong one, isn't it? Look at that. That was on the 4-hour chart, that's why. So I'm getting a reference point between both of these points here, and it comes in at 39.94 and a quarter. The low comes in at 39.94 and a half. So it's only off by a half here. So as it drops down, it's digging into this range. Much like I said over here, we would see the hourly chart, it would dig down into this range. I mentioned that it didn't need to come back down to this old high, but it did, went through it, but it rebalanced all of this here. Hit that right there. And rallied. My interest was not in NASDAQ. Why was it not in NASDAQ? Why wasn't I interested in this market here? The S&P had a very clear imbalance between 4,030 and a half to 4107 and a quarter. I felt that that was more likely to be delivered, more precise, even though we had the volatility and upside expectations on NASDAQ fulfilled except for its higher end target. This is the one I opted to trade in. So we're going to go into a 15-minute time frame. Alright, so we have sell side liquidity pool created here. I showed this morning with my son's model. I gave him going long in here and taking a exit. Ring above for short-term buy side liquidity. And you can go to Twitter and see that. And then we have relative equal lows. It's dropping down. Now notice it's dropping down into what? That previous day's imbalance. So this digging down in, all that's doing is picking up what? Sell side liquidity. Those stops are being ran on longs that went from here and here. They felt like they were on side. They dropped it down. Judas swing. Okay, this is the Power 3 concept I teach, where it creates the open, trades down, creates the low of the day, and rallies, makes a high day, and comes off the high for your classic open, low, high, close day. So we have Judas swing creating the low of the day, going long in here. We'll look at that on a 5 and 2 minute chart. NASDAQ, same thing here. We have relative equal lows. It drops down, takes those out, completely hits the imbalance shown on the hourly chart, rallies, comes back in, fills a fair value gap here in the 1 o'clock hour, starts to rally, another fair value gap here, fills in that, rallies once more, and digs into our 12,800 target here, and then just fell short of the next daily buy side liquidity pool around 12,975, we'll call it. The 4,075 level I mentioned, I tweeted today also, so I have to mention that that would be a good area for an active pupil to take profits. In the afternoon, we had another rally up into the 4107 and a quarter level. Let's drop down into a 5 minute chart. Okay, and you can see the really nice optimal trade entry here and fair value gap. What's the high of this candle? 40.78 and a quarter. So 4,078 and a quarter. The low of this candle comes in at what? 4,077 and 3/4. Order block. 3 consecutive down close candles prior to the up move. Fair value gap. Hammers it here. Rallies. And that fulfills that final move to 4107 and a quarter. On NASDAQ, similar fashion, we had a drop down into the fair value gap here. Sell side liquidity taken, rallied, and just fell short. So this one didn't deliver as well as I would like it to have delivered, obviously. But over here, the market I was focused on, market I gave commentary and hints and nudges on Twitter. This was the one that delivered out rather nicely for me. I'm seeing questions in the comment section. I get a lot on Twitter as well. Why don't I talk about Dow or US 30? Well, I don't do US 30, I don't do US 500, I don't do US 100 because they're CFDs. We are not legally allowed to trade them in the United States, so I don't touch them. And besides, I have access to the equities markets through the futures market, so I trade those markets. So why don't I touch or trade the Dow 30 index? Because it's too spotty. It doesn't move as symmetrical as these two pairs here. So I use it for like SMT studies. In other words, I'm looking for one to fail to make a lower low. I'll use it in that capacity, but I'm not trying to trade it. And you get more bang for your buck trading one of these two here. In fact, you could just trade one and just use the other as a barometer, okay, to support your idea. So it's not that I don't like the NASDAQ. It's not that I don't have the ability to trade Dow. I just prefer the S&P because it's just one of those markets I cut my teeth on in the early 90s, 1990s, in case you weren't paying attention. So we'll see if it wants to run up into that 12,973 and 3/4 level. I believe it's going to. I think it's the next side on the upside. So we'll see. I'm not participating in Friday. I'm completely done. And if you go back and look at the analysis I gave on Monday to Tuesday, and in Tuesday's trading, where I guided for 3,920, covering your shorts there, and then contrast that with the 4107 and a quarter level, that's pretty much the weekly low and the weekly high. It's not exactly those levels, but that's the lion's portion of the move. Okay, you do not need to be able to do what I did this week. And everything was shown to you in advance, either on this YouTube channel or in tweets in front of everybody. No tweet was deleted. Nothing was ambiguous. It was specific. I specifically talked about one direction of the marketplace each individual day, what I was looking for, what levels, what it would form around, and here we have it. So let's go into the 2 minute chart and I'll show you the business on the morning session. All right, so we have sell side liquidity being taken here, relative equal lows. They sweep down below it, sweep down below it. So now we have what? We dug into that imbalance on the hourly chart. as I explained and outlined on the NASDAQ. So it's not needed to be said in the S&P. Okay, so if you're going to go back and listen to last night's commentary and you're looking at S&P, you're not going to hear me say go down into the imbalance that I showed on, let me show you on the NASDAQ. I mentioned that we were going to dig into this and then rally and reach for 12,800 and then 12,973. That was the outline last night. So what's the bias? The bias was bullish. It was doing what? Making the low of the day and then rallying. Well, I'm going to cover that here. I don't need to say the same thing for the hourly chart on the S&P because it's going to do what? Basically the same thing that NASDAQ is expected to do. Okay, so we're seeing that occur here inside this little area. I'm going to shade this section in price action. Okay, so this box is just denoting where price went down below sell side. So now when I go into the hourly chart on S&P, actually I got to go back down into ensure that it's going to be visible on the hourly, and then we'll drop into the 60-minute chart once more. Okay, and you can see that's where the imbalance is. Okay, and it's calling for 39.94 and a quarter, and it went down. It was just 1/4 point short of it. So you can see 94.50. So it didn't get quite down to that final 1/4 point, but that's fine. So inside this area here, it's digging down into that range, just like I explained over here in the NASDAQ portion of the commentary last night. So go back and listen to that video. Everything was outlined. The targets, what we were looking for today, everything. Okay. This is what my private group has been privy to for 6 years. I've been calling these markets, outlining. It's been a lot of people out there on the internet saying, I don't call the market. I can't call the weekly low. Can't call the weekly high. Can't get the daily high. Can't get the daily low. I'm not consistent. I don't know what I'm doing. I can't trade. These people are upset because I'm doing it consistently and I'm teaching you. I'm not making these videos in private mentorships no more. I'm giving them out here for free because there's people that are trying to sell them in my private group. So to kill that business for them and remove that marketplace for them, I'm doing it here. So if you like these commentaries, give this video a thumbs up. Support this because that'll inspire me to keep doing what I'm doing and starve those individuals out there that are scamming everybody else by selling things they had no business selling anyway. Accumulating long positions after sell side liquidity and digging into the imbalance and then targeting what? The 4,075 level hit. Again, look at the commentary for S&P last night, and then the 4,107 and a quarter. There it is. Okay. This is power 3. The open, low of the day first, rallies, major target, and then final target at the imbalance on the analysis I gave you last night. All right, let's go over to the dollar index. All right, so here is the dollar index. This was a little bit of a sloppy market today. I mentioned that we would likely draw down into this area here between this candle's high, this candle's low, right in here, and we just fell short of what I was actually aiming for, which is a little bit more prominent run below these lows here. So we'll likely see it trade into the 105.85, 105.90. I'm looking for it to at least trade down into that, and it was a little bit sloppy. We'll go into the 60-minute chart. Okay, so here's where we were yesterday. It dropped down a little bit further and then repriced back up to redeliver across all of this sell side delivery. We have a breaker here. Low, high. High prior to the low is here. All these down close candles, that's a bearish breaker. Extend that out in time. The market trades right up into that. It does not need to completely close that in because it's trading inside the breaker. Hits it, rolls over, and below this low here, that's the next sell side liquidity pool, and then into the 105s. All right, here is the British pound, and we've called this last night, so we'll be looking for that to be traded too. Still think that's likely, especially with the continuation on the downside on dollar that I'm expecting going into London in tomorrow's New York session. We'll likely see British pound versus US dollar delivered into this level here. 60-minute chart. Okay, you see how we had this buy side imbalance, drops down into it, got 50% of that, and then starts to rally. It looks nice in here for this fair value gap, dug into that, so I'd like to see it spring higher from there. Let's go to euro dollar. All right, here's the euro dollar daily chart. You can see we dropped one more time into the fair value gap on the daily chart, just banging around this trading range between this fair value gap and this fair value gap, which is classic, what? Support and resistance. No, this is institutional support and resistance, if you want to call it that. Bottom line is we're moving back and forth between imbalances. Okay, so there's a guy out there on the internet was chatting, not directly to me, but replying to other people, saying that my fair value gap is nothing more than a support resistance level. So all you got to do is go back and look at every one of my fair value gaps, and you'll see there's a trend line there where you can find old support, old resistance. And the response to that is this: show me the real support resistance level before my fair value gap is there. Because see, I've seen many times individuals claim in books, in courses, in hindsight moves that certain levels are going to be support or resistance, and they go through them. Okay, and I've lost a lot of money doing that kind of stuff. So these are the levels that I'm looking for when I'm going through my analysis, and I'm expecting them to be recapitalized. So you can see them obviously being utilized here because the market's being held in a range. So let's drop into a 60-minute chart. Okay, the market rallied up, went into that imbalance here, and then we sold off overnight and dropped down into what time? 7 o'clock in the morning. That's the beginning of the ICT kill zone for New York Open. So the market digs into that, rallies up to the imbalance between this low and this high. I outlined this on Twitter. So between this candle's low at 42 and this candle's high at 75, not bad for a little tiny bread and butter type setup. And it went once more down into an imbalance, which we'll look at. We'll go into a 5-minute chart. Okay, here is the 5-minute chart. Digs into that daily fair value gap at 755. Rallies, short-term high taken out. That's a shift in market structure. Bullish. Fair value gap, we drop down at 825. Bam, hit it. What's it going to run to? The imbalance between this candle's low, this candle's high, relative equal highs, buy side liquidity, and I think that is going to be it for today. Hopefully you've learned something this week. I will be away from analysis and trading on Friday. So I will post a video, episode 1 of the new Ends series at 10 o'clock Friday, my local time. So if you have a clock set to New York local time all the time, you'll know what time it is in ICT time. All of my analysis is rooted in Eastern time, okay, or New York local time, and that's what the algorithm operates on. Whether you like to believe it or not, it's not for me to argue. You're just going to have to study it and determine whether or not there is any validity to it or not. But New York local time, everything's operating on that in the markets, not anything else. So anybody that tells you you can't trade with time-based charts, run away from them because they don't know what you're talking about. This week I've absolutely did a clinic on price action, everything in advance, precision like you've probably never seen in your life, and it was my esteemed honor to be able to share that with you. Next week we'll continue with this carnival-like atmosphere. Enjoy your weekend and be safe.